And as the LIC flop show continues, what should investors do? My colleague Sakshi Batra had a word with Avinash Gorakshankar from Profit Mart Securities. Listen in to a quick take on what perhaps would be the right strategy on LIC at this time.
I wanted to understand from you, but where would you and the investors really draw valuation comfort at LIC? You know, the new embedded value, where would that be, where it will definitely give that kind of a confidence to investors that long term it is going to be a growth story?
Yeah, I think my guess is, whoever has invested in LIC, unfortunately, if they've invested for IPO gains, I think that is completely ruled out now. I think whoever is holding on to LIC, my sense is unless you've got a 2-year view, Sakshi, this stock is not going to make a lot of money for investors, because clearly, if you look at LIC, if you look at all the other private sector insurance companies, there's a significant difference in their profitability levels. As I mentioned earlier, LIC is more largely on the annuity side of the business where the margins are lesser. And obviously the value add, the margin, which is the incremental margin which is earned on new policies, that is also comparatively lower compared to an SBI Life or maybe a Max or something like an SDFC Life. So I think you have to give some time. Our sense is that hopefully now the company has gone public, so there will be a revised kind of aggressive approach from the LIC management. And obviously the company would also like to see that, its market cap actually catches up with the private sector peers. So this is a process which may take at least 3 to 6 months.
Nilesh, it's very good to see you after a long time. My first question to you, of course, is about whether retail investors in India will hold their nerve through this volatility, because they have held the market up quite well in the face of relentless FII selling. But as this volatility continues, do you see the fear, or are you seeing any signs that the enthusiasm from the local investors of the last couple of years is beginning to ebb, or any questions are being asked? Because you're in a very good vantage point to gauge retail sentiment. What are your thoughts on this?
So then that's a great question. This is first time in my life that I'm seeing investors more confident than fund managers. I go and present to investors saying that this is an uncertain time. There is so much of uncertainty around, returns will be volatile or negative. And they come back saying that, Nilesh bhai, we are here for long term. So I believe that this time there are lots of investors who are very confident and who will continue to support the market through their disciplined investing.
What is your advice to them at such a time when they are sounding so confident? In terms of asset allocation, what are you telling them? Because we've seen equity market volatility, and bond yields have gone up quite a bit. Fixed deposit rates from banks will start to head up soon. At such a time, between equity and fixed income, what is the ideal asset allocation that you're recommending?
So one thing then we have been telling our investors is that this is a market full of uncertainty. What happens in Russia, Ukraine, what happens on oil, what happens in US Fed rates, and how India's own inflation trajectory behaves. All these are going to make a material impact on market. This is the market where in fixed income you try to remain either in dynamic side of the bond fund or at the shorter end of the curve. On the equity, you try to be marginally overweight large cap and marginally underweight small and mid cap, and within that keep equal weight allocation to equity. If there is correction and market continues to trade below its average valuation, then you can increase your allocation to equity in a very, very calibrated manner. Don't jump into market at one go. There will be lots of volatility ahead. So please become overweight at lower level in a calibrated manner.